Welcome back. We have Gurmeet Chadha joining us, Managing Partner and Chief Investment Officer at Complete Circle. Gurmeet, good morning. Thanks a lot for joining us. So many stocks surging. I wanted your views first on the Bajaj twins, Bajaj Finance and Finserv. Just no stopping these two after the numbers. And there's been, of course, FI buying as well. So that maybe has helped. What's your view now?
So, Anuj, always a high beta stock, both ways, right? So when the market's correct, always takes a larger a bit of pounding. Happened in COVID, if you remember, from what 5,000 levels to 1,800, and then went up to almost 8,000. We're almost back at 7,500 now. So this is one stock, which has always been a portfolio stock for me. Been lucky in terms of holding it for very long periods. But I think at this price, probably the incremental returns could be more muted, because when things pick up, as I said, its beta is almost like 1.3, 1.4 times in terms of when we calculate it. And at about 10, book value remains pricey. Same for the FinServ, especially after the news of both split and bonus. I think this is a stock to be bought when the news gets a little murky. Let's say if we get another round of correction due to more aggressive Fed than what the market anticipates. Maybe that's a better. I mean, there are better NBFCs. I think Chola, HDFC Limited. To me, if you want to look at, let's say, NBFCs are better choices right now at these valuations.
Okay. I wanted to ask you about Wipro and what your thought is on this, the possibility of this recession hitting the IT companies. Wipro has held back on their June quarter flexi pay of their staff as well. So there are some problems. Do you think it's specific to Wipro, or do you think that the entire IT sector could be a bit under pressure because of this?
So, my sense is I think the IT companies will get differentiated. Obviously, there is some slowdown. I have clients who worked as a CTO with some major IT companies. I think there is some slowdown. It's not as bad as what we thought when the markets were correcting. So I think this particular news, and Wipro's problem has been frequent leadership changes, a lot of news which is non-business, and that's why it's lacked consistency other than being a great wealth generator in the past. I think within IT one should look at more players where probably you think probably the worst happened last quarter. So let's say somebody like a Tech Mahindra, the EBITDA margin dropped like 360 basis points, trades at 13, 14 times FI at 24 EPS. The communication vertical is almost 45-50% of revenue. Even if you see last quarter, the retail and technology vertical did well. It was the PFSI and communication which was a dragger. But as 5G rolls out, globally, you should see that pick up. We are seeing traction from both the equipment providers, software vendors, system integrators. These are the clients they deal with. I track it closely in terms of the number of active clients they had. It's well above 1250 now. So it's pretty granular now. And similarly HCL. Then there's another sub-segment in IT which I quite like, which is this ERD. Tata Elxsi now obviously looks almost out of reach with the kind of run-up it's had. But there are some other names like KPIT and LTTS which look interesting, from a medium to long-term perspective.
Gurmeet, just to go back to that financials point, I was just remembering SBI card yesterday spiked in the last hour or so, and then later in the evening we had that RBI discussion paper basically requesting stakeholders to give their rationale for levying all kinds of charges across instruments, across various category of instruments. Now, RBI's paper does not have a specific stance this way or the other. For cards, the big problem has been the MDR issue. Any thoughts at all?
So, Prashant, I think we'll have to wait on this in terms of more clarity coming on the nature of these charges. But one thing, if you see, whenever economy picks up, and I've been an ex-banker, the share of this revolver credit and the loan mix, which is the EMI built in the card, EMI picks up, and that leads to expansion of your margins and income. And SBI also has a slightly different positioning vis-a-vis. There is a bit of a premium because it's the only listed play in terms of cards per se. Second, I think this UPI getting enabled on credit card, I think would be a big trigger for card companies in terms of sheer numbers and volumes. They've been adding cards incrementally in tier 3, tier 4 towns. in the worst of the COVID period, I think it stood the test of time, both in terms of credit costs and delinquencies. It has that old system in terms of their risk management, etc. So I quite like the idea. It's a portfolio stock for us. It did correct, sub 900 during the correction. So it remains constructive. We have a constructive view on SBI.